My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. Let's take a look at this market. It's clearly in the red. We have the bonds down. We have all the market indices down. The market is extremely uncertain at this juncture. As a matter of fact, VIX is up for the first time over 13. Looking at the VIX futures at 1330, up 79 cents, almost 80 cents right now. Taking a look at the major market indices, the Dow Jones is down 174 points at 19,838 on the futures. Taking a look at the Russell 2000 futures, down $18.20 at $1,349.30. Taking a look at the NASDAQ, down 54 and a quarter at 51.08 and a quarter. That is on the NASDAQ futures. Taking a look at the S&P 500, down 21 points at 2267.75. You have weakness in the U.S. dollar, down about 3 cents at $100.49.5. And you got crude down 51 cents at 52.65. A real mixed market right now. And this week has a heavy dose of economic data that I want to kick this Strategy Now session off on. Not only do you have our earnings reports, you have also some policy statements from the Bank of Japan and the Federal Reserve. And so this is throwing out some caution, just to name a few of the elements that could be, putting the market on edge outside of the travel ban that Trump had put on place, that the Trump administration put in place. Now, taking a look at some of today's economic reports that did come out, I said watch the personal income reports for December as well as the pending home sales. Taking a look at the personal income report, it increased in December by about 0.3%. Now, the expectation was right around 0.4%. You did see personal spending increase. So you see a lower amount on personal income rising as far as expectations. You're also seeing personal spending increasing by 0.5% in the month of December. So you got spending rising faster than income. And a drop in personal savings rate could mean one of two things. It means that consumers were spending out of their savings because it's, out of necessity, right? They have to, they're not making enough. Or they were feeling better about their situation and their income prospects, and they basically were out spending money. We're going to see. That's a wait and see, but the way the consumer discretionary space is going, I don't know. Taking a look at the pending home sales, they rose to 1.6% for the month of December. That was well above expectations of 1.3%, and that's way above the 2.5% decrease in November. So that is positive for the housing sector, which the housing sector has been moving to the upside. Now, the executive order on by the Trump administration on the travel bans is really starting to get global markets and domestic markets a little bit uncertain about the fact that Trump might be favoring his protectionist agenda rather than looking at the priority of being pro-growth promises that he gave during his campaign. You're seeing that the cyclical sectors like energy, which is leading the downside, down 2.3%, are really leading to the downside. You see crude oil trading at, as we said, $52.63 a barrel. It's down today. You see the consumer discretionary space, XLY, down 0.6%. And thus far, you're just seeing overall weakness. The non-cyclical side, the 5 spaces that you would typically see as far as retreat trade for safety, consumer staples down 0.2%. You also have telecom services and real estate down 0.5% and 0.7% respectively. Again, you're seeing a uncertain kind of trade right now. What's also notable is the tone of volatility. It's first time in a while that we've seen volatility spike up like this, with VIX at basically $12.35, up $1.77. This is after we saw a 2.5-year low on Friday. So maybe this complacency that we were starting to see in the market is starting to wear off. But again, with a 12 VIX, 12, 13 VIX, to me, it still needs a lot of movement before I'm going to see anything significant as far as uncertainty and the pickup of the bears, but they are clawing back. Watch the Treasury markets. That's going to be your red flag. Right now, while there is a risk aversion to the tone of the market, the Treasuries aren't showing it. The 10-year yield right now is only lower by 1 basis point at 2.48%. Bottom line is that you're seeing that the yield curve right now is not moving to the downside. In other words, bond prices aren't popping up. That's telling me that there's not that much uncertainty in the market until I see the bonds start to move. Even on the shorter end of the curve, you see that the 2-year yield is only fallen 2 basis points at 1.2%. Until we start seeing these yields peel off some more, I'm not really buying into a significant pullback right now. What everyone's been forecasting, anywhere between a 2 to 5% on the short term, maybe 5 to 10% if we get real dramatic. But it is worth keeping an eye on. All right, folks, so that's it. The strategy right now is getting a little bit of protectionist, trimming some profits, and basically wait and see on the next Trump agenda item that's going to be coming to the forefront. We will be back at Tech Talk at 3:30 Eastern Time. This is where we're going to start talking about some of the setups that we're going to see from a technical perspective, as well as using option pricing to get a specific range on stocks. Join me here at MarketStream.live at 3:30 Eastern Time for Tech Talk. See you then.